Australian dollar to US dollar just printed a daily buy signal against a monthly strong sell. That is the kind of conflict that creates a massive liquidity trap this week. If you're watching this on Monday, July 13th, you're seeing the Aussie dollar at 0.6951, up 16 pips from Friday's close. But the structure is screaming one thing: the bounce is a trap. This week has one danger zone, 0.7000, and one 3-5-day opportunity that could deliver a 150 pip decline. I'll show you both right now. Write this number down, 0.7000. If that level breaks and closes above, the entire monthly downtrend resets. But if it holds, we're about to see a freefall back to 0.6800. Stay to the end. I'm giving you 2 Monday scalps and 1 swing trade that can run the next 3 to 5 days. Here is your instant weekly verdict. The 3-5-day structural bias. Fade the rally. This is not a trend continuation. It's a bear flag reloading inside a monthly strong sell. The single invalidation level that flips the weekly bias is a daily close above 0.7060. If that happens, the monthly downtrend cracks, and we shift to a bullish swing. But as of right now, the bearish structure is intact. The herd is positioned short, and they've been forced to cover, which means this early week squeeze has one purpose: to suck in late breakout buyers before the rug gets pulled. The liquidity pool above 0.6973 is the trap. Smart money will be fading it, not chasing it. So, repeat after me. The 0.7000 zone is not a breakout, it's a liquidity grab. Let's go. Straight to the charts. On the weekly time frame, Australian dollar to US dollar remains in a strong sell. Price is hugging the lower range of a multi-month decline, and the moving averages are stacked bearish. The 20-week moving average is sloping down well above current price, acting as a ceiling. The weekly MACD is still deeply negative, and here's the hidden danger most traders won't see until Wednesday. While prices bounce from the 0.6800 region, the MACD histogram on the weekly is actually printing lower bars. That is a classic bearish divergence on the bounce. It tells you the momentum behind this recovery is fake. It's exhaust, not accumulation. The weekly RSI sits at just 48, not even oversold. So there's plenty of room to fall. The ADX is at 34, confirming a strong trend, and that trend is down. Weekly support comes in at 0.6888, 0.6834, and the critical 0.6803 floor. Resistance is led at 0.6973, then the psychological and structural wall at 0.7004, with a stretch to 0.7058. That's the battlefield. Now pull up the daily chart. This is where the trap is most visible. The daily trend flipped to buy late last week, but look at the moving average structure. Price is trading at 0.6951, below the 5-day MA at 0.6979, below the 10-day at 0.7010, and below the 20-day at 0.6993. So the bounce hasn't even reclaimed its short-term moving averages yet. That is not a breakout. That is a bearish retest. The 50-day MA down at 0.6859 is the real value area that price could easily revisit. The daily MACD is positive but weak, sitting at 0.005 and showing signs of flattening. Stochastics are in oversold territory at 28, which explains the bounce, but they're starting to turn. Williams %R is at -79, still in the basement. So, the daily buy signal is a technical reflex, not a trend change. The 4-hour and 1-hour charts are both strong buys, which aligns with a Monday morning continuation higher. But here's what most traders will miss until Wednesday. Once that intraday momentum exhausts at 0.69730.7004, the daily and weekly gravity will take over and slam this pair back down. The cross-asset linkage backs this up. Australian dollar to US dollar is the purest Asian risk proxy this week. Watch the S&P 500 futures. If equities roll over, and gamma structures suggest a heavy 4,500 strike on SPX, the Aussie will be the first to get crushed. Every pip higher in equities is buying the Aussie time. Every pip lower will accelerate its decline. Now let's connect the calendar and flows. Over the weekend, the news was thin, but the institutional positioning data tells a clear story. Net short Australian dollar futures were reduced slightly, but the aggregate speculative position is still heavily short. That short covering created the pop, but it's fuel for a bigger move lower once the weak hands get shaken out. The week's domestic calendar has one high-impact event, NAB Business Confidence for June, released on Tuesday evening US time or early Wednesday in Asia. This is the fuse. The consensus expects a modest improvement. If it prints weaker, the market will instantly question the resilience of the Australian economy, and that 0.7000 resistance will act like a brick wall. If it beats, we might see a brief spike through 0.7000, but I expect that to get faded by the larger weekly structure. Besides that, we have Fed speakers scattered across Tuesday and Wednesday, and any hawkish tone on inflation will strengthen the dollar. So the narrative web for the next 3-5 days is this: Monday and early Tuesday, a continued squeeze traps late shorts and lures breakout buyers into longs above 0.6950. Then, as we roll into Tuesday's US session and the data hits, the rejection starts. Wednesday, the flush accelerates. Thursday and Friday, the pair grinds back toward the weekly pivot at 0.6919 and ultimately targets the 0.6840 area. My directional lean for the week is bearish, targeting a close around 0.6850 by Friday. The exact event that would invalidate this whole path is a daily close above 0.7060. If that occurs, you abandon the bearish swing immediately. So let me ask you now, do you think the Aussie closes above 0.7000 this Friday? Comment yes or no. I'm tracking consensus for the week. Now we get into the trade setups. Most people skip the planning phase. That's exactly where this week's money is made. Keep watching. I have 2 Monday scalping strategies and 1 3-5-day swing designed to capture the week's core move. Strategy 1. The Monday opening scalp. This is a high probability snipe on the continuation of the intraday bounce. The Asian session is likely to see a gentle drift higher, but we need a clean entry. Here's the condition. After the first hour of trade, watch for a pullback to 0.6945. If we get a 5-minute candle that dips to that level and then closes back above 0.6950, that's your trigger. Enter long at 0.6952. Stop loss goes at 0.6936, tucked just below the session low. Take profit 1 is at 0.6973, the weekly R1 and the exact top of the initial resistance band. That gives you a 17 pip risk for a 21 pip reward, roughly 1 to 1.2 risk to reward. The probability is elevated because the 4-hour and 1-hour trends are still in strong buy mode, so this is a momentum ride. If the 5-minute candle closes below 0.6945 instead of reclaiming, the scalp is instantly void. Do not chase. This is a fast snipe, no second chances. The Monday opening SCLP entry, 0.6952, 5-minute close above 0.6950 after 0.6945 tap, stop loss, 0.6936 take profit 1, 0.6973 risk, reward, 1:1.24 hour invalidation, void if 5-minute candle closes below 0.6945. Strategy 2. The Monday liquidity grab. This is a counternoise scalp that exploits the stop hunt expected below Friday's low. Friday's low is estimated at 0.6915, just under the weekly pivot of 0.6919. In a market that's still structurally bearish, the Monday session will likely run those lows to trigger the stops of early longs, then violently reverse. We are going to buy that reversal. If price spikes down to 0.6908, that's below Friday's low. And then within the same 5-minute candle or the next one, reclaims 0.6915 and closes above it. You enter long at 0.6916. Stop loss is at 0.6900, just beneath the wick. Take profit is set at 0.6945, which is the nearest intraday liquidity pool and the middle of the day's expected range. Risk is 16 pips, Reward is 29 pips, nearly 1 to 1.8 risk to reward. This trade requires aggressive execution. You must be ready to pull the trigger the moment that recovery bar closes. If the price stays below 0.6915 for more than one 5-minute candle, the setup is void, the stops haven't been fully run, and the downside risk is real. The Monday liquidity GROB entry, 0.6916, 5-minute reclaim of 0.6915 after wick to 0.6908, stop loss, 0.6900 take profit 1, 0.6945 risk, reward, 1:1.81 are invalidation, void if price remains below 0.69154 for 5 minutes at scalping Monday or swinging the week. Comment scalp or swing. Let's see who's built for this market. That tells me the temperament of the room right now, and I'll know what kind of content to tailor for Sunday. Now, the main event, the 3-5-day swing. This is the trade that captures the entire week's narrative. The rejection at 0.7000 and the decline back into the weekly downtrend. We fade the rally. Entry is set at 0.6990. That is inside the resistance zone between 0.6973 and 0.7004. We can approach this two ways. A limit order placed at 0.6990 with the understanding that we are anticipating a spike, or wait for confirmation. A daily close below 0.6970 after. The zone is tagged. I prefer the limit order because it guarantees you're in the trade before the herd reacts. Stop loss goes at 0.7065, above the weekly A3 and above the monthly structural invalidation. That's a 75 pip risk. Take profit 1 is set at 0.6910, the weekly pivot and the first area where price will pause. Take profit 2 is at 0.6840, just above the S2 support and a level that would represent a full unwinding of the bounce. The risk to reward is about 1 to 1.06 on the first target, and 1 to 2.0 on the second. Once price reaches 0.6945, halfway to TP1, we'll trail the stop to break even to lock in a free trade. The entire swing is invalidated if we see a daily close above 0.7060. If that happens, the monthly structure resets, and we could be looking at a melt-up toward 0.7150. But until then, the path of least resistance is down. NAB business confidence midweek is the catalyst. A weak number will accelerate the move, potentially filling TP2 before Friday. This swing trade is your core position for the week. Size it properly, and let the weekly downtrend do the heavy lifting. Here 3-5 days of NG entry. 0.6990, limit or daily close below 0.6970, stop loss, 0.7065 take profit 1, 0.6910 take profit 2, 0.6840 risk, reward, 1 minute and 1.06 seconds, TP1, 1 minute and 2 seconds, TP2, invalidation. Daily close above 0.7068 quick pulse on risk management. Never risk more than 1 to 2% per trade. Holding through a data event like NAB confidence requires you to tighten your size. Stops are non-negotiable, especially on the swing. This discipline is how you survive to trade the next big weekly move. To wrap this up, the single most critical level for your entire week is 0.7000. If that level holds and we get a daily rejection, the path is clear down to 0.6840 and potentially a sweep of 0.6800 by Friday. If 0.7000 breaks and closes above on the daily, the monthly bears are in trouble and you must flip. Friday's wildcard. If the sell-off gains momentum, we could see a liquidity vacuum all the way to 0.6803, setting up a massive weekly close. I will cover the aftermath and the new blueprint this Sunday. If you want to see how last week's price action laid the groundwork for this trap, the weekly recap video is live now. Tap the end screen and connect the dots. Then hit the bell so Sunday's next week ahead alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that define your week.